Good morning, good evening, good afternoon wherever you're watching this around the world. My name is Raphael, the community manager for Wirex, and welcome to this week's Wirex weekly cryptocurrency news. So we've got a lot of good stories for you. I'm going to be completely honest and talk you through the things that have happened over the last week and the new Wirex sort of things that have happened as well. So moving straight into the Wirex news. Thank you so much for joining me today. You are at the right place for the best cryptocurrency geopolitical news and amazing groundbreaking innovation product updates as well. So let's dive straight into it. So we covered this a little bit in the previous weeks, and just to be clear, Wirex is offering currency accounts. There is the definition of bank accounts is different to currency accounts, because with bank accounts you earn interest, you have certain liabilities and so forth. The accounts that we're offering are basically currency accounts. Very similar if you think of them as fiat wallets, so your pound, euro and dollar wallets. It's very similar to that. And that will allow you to store pounds, euros, or dollars on your Wirex platform. And you'll also have a account number and a sort code for the British pound account as well. So that will allow you to have an IBAN number to receive IBAN transfers and so on. So this is really, really cool stuff. We're in the final stages of getting this up and running, and those will be released with the release of the new payment cards as well. So very exciting stuff to keep it Wirex and to be in the loop. So stay tuned, make sure that you are subscribed and following our Twitter and our YouTube and stuff to get all the latest updates as they happen. Now, obviously, it's been a pretty cool week. That is the target over there. We can see it, the $500 billion mark. We have dropped below 380 billion market cap. And the market cap is currently sitting at 432. So that 500 billion is it's not too far away. So we've got another 80 billion to get there. And considering we've come from a low of of under 380 billion to 430 billion, that is looking very, very optimistic. Let's hope that happens very soon. And also as well, we'll get to that bit soon. So again, really, really cool. And on to this week's sort of cryptocurrency stories. I'm going to start off with some amazing news from Microsoft. Microsoft has released a report on digital identities and blockchain, and it basically talks about all of the use cases that blockchain currently offers. And it's a really, really interesting report, but it's caused a lot of contention within the cryptocurrency community due to one statement. Now, that statement is this one, right? Is that currently Bitcoin and cryptocurrency projects are ready for scaling, which is very, very contrary to a lot of narrative currently being played out, saying that you can't scale cryptocurrencies. Now, what Microsoft has actually come out and said, I'll read it word for word. To support a vast world of users, organizations, and devices, the underlying technology must be capable of scale and performance on par with traditional systems. Some public blockchains, Bitcoin, Ethereum, Litecoin, to name a select few, provide a solid foundation for routing DIDs, recording DPKI operations, and anchoring attestations. While some blockchain communities have increased on-chain capacity, e.g. block size increases, this approach generally degrades the decentralized state of the network and cannot reach the millions of transactions per second the system would generate at world scale. To overcome these technical barriers, we are collaborating on decentralized layer 2 protocols that run atop the public blockchain to achieve global scale, while preserving the attributes of a world-class DID system. Why is this amazing and groundbreaking and extremely important? Well, because this refers to two solutions to the scaling problem. Let's be honest, Bitcoin has a scaling problem. It is extremely expensive and time consuming to send money with Bitcoin. And Microsoft recognizes this, and it recognizes that there needs to be a solution to the problem. But within the community, obviously, there are two distinct fractions. Number one, the first one being with regard to on-chain scaling solution, which is brought along the lights of 8 megabyte blocks on blockchains, which of course is the Bitcoin Cash blockchain, has 8 megabyte blocks. And that makes it very, very difficult to mine. And that is an on-chain scaling solution. It has 8 times the capacity, but it also makes it 8 times more difficult to mine, shutting out certain people. Now, what Microsoft is saying, well, we need to have a off-chain scaling solution, which we've already currently got, mind you. We have segregated witness, and we're also testing the Lightning Network. Those are off-chain solutions that solve the problem of scalability. And Microsoft is basically saying that layer 2 protocols, off-chain solutions, are the way to go with regards to the issue of scalability. So to scale the blockchain, to allow it to accommodate more transactions and have that speed of processing that we currently have in traditional systems and legacy, soon to be legacy systems, off-chain scaling is probably the way to go. Let's leave the underlying tech of the blockchain and let's build on top of it, as opposed to trying to take it apart and build something completely new. So that is very, very commendable by Microsoft, and obviously that's caused a lot of talk and stuff within the community. This is a big bit of news. It's very important because Microsoft obviously has the power in terms of the sort of brain power, the intellectual power, to bring about really, really constructive and good solutions to the issue of scaling. But this is a report I definitely recommend reading. It's really good to see Microsoft providing these sorts of reports on the state of blockchain and decentralized ledgers. The next bit of news, obviously, goes with regards to the Diamond. Hello, Diamond. He keeps changing his stance, and there he is up there. Now, JPMorgan has actually gone out and released a Bitcoin Bible, changing the stance set by their CEO, Diamond, who said that he was going to fire anyone he caught trading cryptocurrencies. They've gone and released a manual on how to trade cryptocurrencies. So constantly changing their view. This report comes from Fox Business News. I don't usually trust a lot of what Fox says, but this specifically comes from them. And it's basically saying that he's gone from calling it a fraud to saying that blockchain is real, and now releasing an investor Bitcoin Bible. And all of these change in stances have happened within a 5-month period. So it's pretty crazy. He's released a pamphlet which went out on Monday, and it details everything from the technology to their potential applications and the challenges that are set. So according to the report as well, which is, the extremely rapid growth and falls of various digital currencies over the last several months have forced not only JPMorgan, but all market participants to closely monitor and understand this new market. And of course, this is the currency aspect of it, the financial aspect of it is just the tip of the iceberg with regards to the tech, the applications and stuff that can be built off of it. Next bit of news, well, someone has also started to go half diamond. He's not yet gone full diamond, but he's gone half diamond. So the real wolf of Wall Street, Jordan Belfort, has actually come out and said that Bitcoin is basically a fraud. And it's a mirror image of his infamous scam, and he insists that he would have made 50 billion if it was around when he was doing this. Well, I mean, I've watched his interview. It was a video that he posted on YouTube and stuff. You can still go ahead and find it. I'll probably post the link in the description below. And essentially in the video, he declares that governments will essentially take out cryptocurrencies and that people should stay away from it as much as possible. And a lot of it was completely unsubstantiated. I mean, I personally saw this, his entire interview after the Senate hearing, where they basically ruled that actually a lot of government agencies need to work together. Now, which includes the departments for technology, departments for finance, departments for regulatory bodies, and so forth. Right now, the good news about this, the good news about having lots of different government departments working together on this subject, means that there is a lot less room for any lobbyists. For those of you who don't know, a lobbyist is a person with a lot of money that can basically get favor with certain senators and certain government bodies to basically rule for things that might potentially help them. So if the more government bodies that are involved in regulation and classification of cryptocurrencies and Bitcoin and so forth, the less likely it is for lobbyists to be able to sway the decision in their favor, which is very good. And the general tone from it is that the US government needs to work hard to make sure that it doesn't alienate people from cryptocurrencies and to build an open landscape. Now, it seems that Jordan Belfort completely ignored that and decided to go half Jamie Dimon and call Bitcoin and cryptocurrencies a fraud. He'll probably do the same thing as Jamie Dimon and JPMorgan, and fast forward 5 months, he'll probably be releasing a book on how to trade cryptocurrencies. But who knows? This is all speculation for the time being. I'm just reporting what I'm seeing, and this comes from the Sun, a UK tabloid paper. And now the next bit of news kind of goes on from that, and that is with regard to the US Arizona Senate. Now, they've actually gone ahead and passed a bill that will allow US residents to pay tax in Bitcoin. So this is a huge achievement. The Arizona Senate passed a bill on February the 8th to allow residents in the state to pay their taxes with cryptocurrencies. The Senate Bill 1091, which intends to enable cryptocurrencies for tax payments, was introduced on January the 10th, 2018, and passed by the Senate Finance Committee by a 4-3 vote on January the 24th. On February the 8th, the Senate passed the bill by a 16-13 margin with one no vote. The bill has now been sent to Arizona's House of Representatives. Now, if this gets adopted, Arizona will become the first state in the US to accept cryptocurrency tax payments. Now, by the year of 2020, as stated on the public record, the bill would allow taxpayers of the state to use a payment gateway such as Bitcoin, Litecoin, or any other cryptocurrency recognized by the department as an electronic peer-to-peer system to pay taxes. Now, this is huge for mass adoption. This is a huge step in terms of government recognition, which will eventually help and aid mass adoption. The only thing currently giving fiat currencies recognition is the government recognition of them, right? The only reason why your £5 note is worth half as much as a £10 note is because that's the value that is given to it by the government. So this is a huge bit of news. It's the first state in the US that's one down and nearly 50 other states to go. So let's see how that develops. But 2018 is looking like a very, very bright year for cryptocurrencies and Bitcoin. We're getting a lot of new sort of protocols, second layer protocols that are being built on Bitcoin, such as the SegWit 2x and Lightning Network. So, that is extremely cool. Now, going from one government to another government, the European Bank could soon hold Bitcoin, admits the European Central Bank president, right? So this is the president of the European Central Bank, the bank that basically loans money to the central banks of, the European countries, such as, France, Germany, and so forth. Has actually come out and said that they may hold Bitcoin. Now, this comes from ccn.com. Now, while delivering the opening statement and closing remarks at a European Parliament meeting this week, European Central Bank President Mario Draghi weighed in on the topic of cryptocurrencies, referencing their decisions by other speakers during the meeting. The ECB chief revealed the authority hadn't observed any current trend of European banks holding cryptocurrencies. More pointedly, financial institutions in the European Union are showing a limited appetite for digital currencies like Bitcoin, he said. Adding, this is currently the case despite a heightened public interest and appetite for cryptocurrencies. The trend could change with the advent of cryptocurrencies permeating into mainstream finance. And he stated, however, recent developments such as the listing of Bitcoin futures contracts by US exchanges could lead European banks to hold positions in Bitcoin, and therefore we will certainly look at that. So, I mean, this is an interesting development. Bitcoin has had a long, well, not very a long life. It's been around since 2008. So it's been around for nearly 10 years. And right now, what is currently happening is that it is being discussed at the absolute highest echelons of parliament and government. This is the president of the European Central Bank openly discussing the possibility of holding cryptocurrencies. Now, when governments start talking about holding reserves of something, that should be a wake-up call to a lot of hedge funds and financial investors. And it's actually quite promising to see this development for the European Central Bank. And I think that they are following a lot of the stance taken by the UK, which is set to leave the EU in the near future. So this is definitely a very interesting development. And I think 2018 is going to be an exciting year. Now, on to the next story, again from ccn.com. Manero declares war on ASIC manufacturers and ASIC miners. What does this mean? Well, for those of you that don't know, cryptocurrencies that have proof of work are mined, and they are mined by processing power or hashing power, right? In the beginning, you used to be able to mine cryptocurrencies with either your graphics card, which you bought to play games or mine cryptocurrencies, or your processor, your computer processor, and it was all kind of maintained in your personal computing hardware. So you could go down to the store, buy the graphics card, bring it back home, install the program, and mine your favorite cryptocurrency. What happened then is that some manufacturers of hardware, computing hardware, decided to build all-in-one solutions to mine cryptocurrencies, and they were extremely efficient, hyper efficient at mining cryptocurrencies. And this is what spawned the ASIC miner. There is one big company that has what a lot of people would describe as a monopoly and produces the vast majority of ASIC miners on the planet, and that company is Bitmain. And what this means is that unless you have one of their mining products, it's extremely difficult, if not impossible, to make a profit with cryptocurrency mining. And this has meant they have some sort of very big standing within the market, and the market is highly dependent on what they do, what products they released, and so forth. So it's not great. And Manero, being a completely decentralized ecosystem, the developers have published a development update addressing what has become a reoccurring question among altcoins that can currently be mined profitably with graphics processing hardware. Now, how to respond to the threat? So there's a person that I've specifically mentioned. How to respond to the threat that Bitmain or other mining rig manufacturers can develop an application-specific integrated circuit, that's what ASIC stands for, miner built to mine kryptonite, which is XMR's proof of work hashing algorithm. So from conception, Manero or XMR was a ASIC resistant algorithm, which means that it's very difficult to build an application-specific integrated circuit miner, an ASIC miner, for their proof of work hashing algorithm. So it's to be seen. I hope that they continue this trend, because I fully feel that if there is a transition to ASICs, so this is an interesting article, so I recommend looking into that a bit more into more detail before I go off on a complete tangent and explain this in absolute detail. But anyways, ASIC mining resistant coins are beneficial because most people have graphics cards in their computer. If you have a gaming computer, you have a graphics card, and that allows you to maintain any cryptocurrency network that you want. To have a monopoly on the to potentially have a monopoly on the sort of hardware can limit the community. So that's something to watch. Obviously, and the next bit of news comes from the Merkel and continues the Bitconnect legal saga, which is happening currently in the US, and the plaintiff for the US claims that the founders of Bitconnect are associated with OneCoin. And OneCoin has already been sort of highlighted as a potential scam and an alleged Ponzi scheme. So this is getting really interesting. Maybe they'll make a movie on this in the future. I genuinely think a movie on OneCoin and Bitconnect would be more entertaining than that the Big Short film. So if you guys haven't seen The Big Short, I completely recommend you watch it. One of my favorite films with Brad Pitt, Ryan Gosling, and lots of people in that. I reckon a film on this would definitely be more entertaining than that. So that's to be watched. It's an interesting development. All of those famous YouTubers are also mentioned in the suit, so it's got like a big cast. So that's very cool. Who said crypto doesn't have drama and politics? There's tons of it. I don't even need to watch Game of Thrones or TV because all of my drama is happening right now on my computer screen. We can get in the thick of it as well. Now, onto some really good sort of next big, huge, good bit of news is with regards to the world's first Olympic athlete paid in cryptocurrency, right? Seen lots of people being paid in cryptocurrency. I myself have personally been paid in cryptocurrency. I've seen kids in developing countries like Vietnam and India and stuff being paid in cryptocurrencies for dev work when they can't actually open a bank account. So to see athletes, kind of mainstream people that are on the TV opting to get paid in cryptocurrency is really, really cool. So Canadian speed skater Ted Jan Bowman has become the first Olympic athlete to be paid in cryptocurrency following a deal with two new technology companies, a whole new frontier. In this article by bitcoinist.com, for the first time in history, an Olympic athlete has been paid in cryptocurrency. According to CNN, Canadian speed skater Ted Jane Bowman, a double world record holder, has signed a one-year sponsorship deal with cryptocurrency-focused social network OnG Social, in addition to agreeing to terms with virtual reality developer SecVR. Now, both of those companies are crypto-based companies. So this is really a whole new frontier. It will be exciting to see how cryptocurrency can work for Ted Jan in particular, but also the impact it can have on the sport marketing industry as a whole. And last week we talked about American footballers increasingly getting interested in cryptocurrencies, and even when I met one of them as well on my way to Ukraine. Now, obviously, we cannot ignore the day today. It is Valentine's Day, so happy Valentines to all of you. My Valentine is Bitcoin and cryptocurrency, if I'm completely honest. But we here at Wirex care about you guys, and we have some Valentine's Day gift ideas. Obviously, our big Valentine's Day gift will hopefully be is working as hard as possible on getting you the cards and the upgrades to the platform that you guys are desperately, and I'm very desperately, we're all here desperately working really, really hard towards getting for you. And, you guys will give you guys some Valentine's Day gift ideas for your partner that is obviously crypto crazy like me. So I would love to see any of these. I hope you guys see all of these as well. So first and foremost, obviously, the best gift idea is to give your partner Bitcoin. Any fraction of Bitcoin you can afford. It will definitely make them happy. It would make me happy to receive any amount of Bitcoin. And don't forget, if you have a Wirex account, if you have a Wirex wallet, you can send Bitcoin for free instantly from your Wirex wallet to any other Wirex wallet as well. The other thing is, why not a physical wallet, a paper wallet? is a nice present to give. It's just a Bitcoin wallet that can be kept offline, and it's very similar to a Trezor, for example. The other thing is physical coins. So there are glowing physical Bitcoins that you can buy. They're more sort of, I think you can use them as a wallet. The majority of them are just sort of, souvenir type thing. And they're more like collectibles. So research what you're buying, and just make sure that you're buying what you want to buy. You can buy crypto kitties. Crypto bots as well is something that is overtaken crypto kitties, but this is something that might come about soon. The other thing, it would be a good thing if you have a spare phone, you can buy a cheap spare smartphone to use for two-factor authentication that can be kept safe somewhere around to add that extra layer of security. Bitcoin jewelry is becoming much more popular. I'm seeing it all over Instagram every now and again. People are actually making Bitcoin jewelry and Bitcoin art, which is cryptocurrency decentralized art. So it's a really good option for sort of Valentine's Day gifts. Books, so many good books coming out. These are a few. This is definitely something I'd recommend if you are a developer. And there are more books that we can add to this list as well. Definitely awesome stuff for any crypto crazy Valentine's person currently out there. Excellent, amazing. So we've just given you all of the top news and the top stories, and we're going to give you some more because next week on Thursday, we're hosting another Wirex Bitcoin Bear Club. If you've attended the previous ones, thank you very, very much for coming. I really enjoyed having you all there and seeing you in person and speaking to you guys. We're going to be hosting another one at Yoti in a personal venue, and there'll be free beer and pizza on the night as well. And there are loads of tickets available. It's co-hosted by Yoti, who are there. And just come along. If you're in London, if you're based in London, this is a free event for you to come down to. And we're just going to be talking all things Bitcoin and cryptocurrency. If you like any of the stuff that we've discussed here, please go down to the community forum and obviously post your stuff there, and we can continue this conversation. But that's pretty much it. That's everything for this week's edition of Wirex's weekly cryptocurrency news. My name's Raphael. I hope you've enjoyed the top stories, little highlights again. Remember, Jordan Belfort almost went full Jamie Dimon. Jamie Dimon went 360 back on what he said. Manero ASIC mining resistant. We're launching accounts with a IBAN number and account number and sort code, but they're not bank accounts, they're currency accounts. And happy Valentine's Day. My name is Raphael, the community manager for Wirex. I hope you've enjoyed this week's edition of Wirex's cryptocurrency news. And I look forward to seeing you guys next week. Also, yes, tomorrow we're doing the special trading analysis as well. So we're going to be exploring the price of Bitcoin. As you guys can see, I'm on the moon because we've had one of the first bullish periods for a while, and we're looking towards that $500 billion market cap again. We hope to touch you again soon and see you there soon. So please make sure you like, subscribe, and share this video from whatever platform you're watching it. I'm live on Facebook, Twitter, and YouTube. And also subscribe to our YouTube channel, follow our Twitter feed, and like our Facebook page to get the latest from Wirex. And you can be one of the first people to know when our new services are coming out, the payment card and the extra features and so forth. So I hope you guys have enjoyed this. My name's Raphael, signing off now.